quick recap. So on the 20th, July 20th, I've shown you that this is the US dollar, alright, the United States dollar, the USD, the dollar, and this is called a liquidity void, meaning, see this big green candle right here on your screen? This was the last upward move before it all started going down. Boom, boom, boom. Each candle on this chart represents a day, okay, and so it comes down, and then this is the highest it retraced, which means this is all a void. There is no upward movement here yet, okay, and this works vice versa. If it's all upward, there's a void until it gets filled. You know what I'm saying? And so whenever you zoom in on a 4-hour, it looks like this. So really, this big box was from here all the way down, right? So it's really from here all the way down to this candle. So from up all the way to here. But I just like to look at these little ones in between because I use them as targets, right? It's like a target. Keep in mind before you even get to there. So anybody selling right here, they call this a double top, but it's really called equal highs, because if I'm selling, people are selling, they put their stop losses up here or right above these highs, right? So meaning what that means is when the market retraces up, it's going to stop them out. You know what I'm saying? Down here you have equal lows. They call them double bottoms. But if I'm buying right here, people put their stop losses below these, hoping that it's going to rise up. You know what I'm saying? But these are areas that liquidity, anytime there's money in the market, it's called liquidity. There's liquidity resting up here. So the market wants to go and target that shit. So just follow me, all right? So this is today. This was July 20th, and today's what, August 17th. Let me zoom out. Go back to the daily. All right. So this is the daily, and this is that box I was telling you about. So it will look like this, I think, until it fills that void, right? Until that void gets filled. Boom. You know what I'm saying? It's just a target because we know it's going to have to trade back up. And then you have these equal highs. So let me show you on the 4-hour. So again, it's just a way to kind of gauge and track what's going on. So the last top one, right, this last one, after it started closing these up one by one, we're using them as targets. You know what I'm saying? Because it's something to look forward to happening. Like, look forward to that shit happening. That's what I'm trying to say. Right? And it does. Like, it does. So right here, it starts closing. It's not closed yet until it finally does. And then these get ran through. And everything happens. What happens on one side happens on the other. You know, universal law. You know what I'm saying? As above, so below. What goes up must come down. And so here's just the same example on this side. So this is all upward movement until it starts retracing, and now this gap is going to be here forever until it gets closed. You know what I mean? But we like to look at the higher time frames, like the daily and the monthly and the weekly, because those voids are more likely to get closed than anything. So again, I learned this from ICT, and it's called liquidity voids. So it's like the same shit right here, right? I'm doing a bunch of examples right this time. So from right here, let me show you. So this is the last. It's a green candle. What date? It could be a Sunday. It's not a Sunday. All right. So from here, it's all downward movement. Oh, it's a Friday because there's a gap right here, right? So it's all downward movement until it comes up and closes that void. You know what I'm saying? Same thing from right here. It's all upward movement until it starts closing that void. So if you want to learn more about that, my mentor kind of wigged out because people kept downloading his videos and selling them and shit. So he just put everything on YouTube so anybody can really learn this shit.